Okay, so, wow, today's market news, huh?
Yeah.
It's a lot. We're going to try to make sense of it all today.
Okay.
We're looking at this investing.com article. It's by Peter Nurse,
Hmm.
and it's called European Stocks Mixed, U.S. Inflation, Chinese Stimulus in Focus. So Europe's kind of all over the place. U.S. inflation is looming, and China's making some moves.
Right. And I think what's really interesting here is how connected these things are.
Yeah.
It's kind of like, everything in the global market is connected. One piece moves, it's going to affect something else.
Yeah, it's like a butterfly effect thing, right? Like
Okay.
one butterfly flaps its wings.
Exactly.
And then we have,
Chaos.
market chaos. Yeah.
Yeah.
So let's start with Europe.
Okay.
So the article mentions that the DAX, which is Germany's main stock index, and the SECI, which is in France, are both down a little bit, but the FTSE, that's in the UK, is actually up.
Yeah.
So it's like, are we feeling good? Are we not feeling good? I don't know. It's uncertainty, right? I think today what we're seeing is, everyone is really focused on the U.S., specifically this inflation data that's coming out, because it's really going to determine the Fed's next move in terms of interest rate cuts. And so, are they going to cut rates aggressively? Are they going to, kind of hold off? We're not sure. And that's creating this global uncertainty.
So high inflation, bad, right? Shouldn't everyone want the Fed to just cut rates and get it over with?
Well, here's the thing. High inflation does make it more expensive to borrow money, which slows the economy down.
Right.
But if the Fed cuts rates too much, too quickly to try to fight that inflation, what can happen? You get uncontrolled growth, and you could actually end up with higher inflation down the line.
Oh, so it's like a delicate dance.
Exactly. It's a tough position for the Fed to be in. So, depending on what these numbers say, who knows? We'll see what happens.
Okay, so that makes sense then why Europe's kind of like, we'll wait and see what happens. They're hitting the pause button. Yeah. So what about China? They usually kind of shake things up in the market. What's going on there?
Yeah, and they're really, I think, trying to take control of the situation this week. So the article mentions that China's central bank just injected a huge amount of cash into their markets. We're talking 500 billion yuan.
Wow. That's a lot of yuan.
It's a lot of yuan. And basically what they're doing is trying to make borrowing easier,
Right?
hoping to boost the economy.
So they're kind of like giving their economy a little shot of like, espresso or something.
Yeah, a little caffeine boost, exactly.
It's a little caffeine boost.
And they're not stopping there. Get this Saturday, their finance ministry is planning a big briefing where they're going to lay out even more stimulus measures.
Wait, hold on. Didn't they just have one on Tuesday?
They did.
Was it that bad that they have to have another one this soon?
Yeah, it seems like Tuesday's briefing was a bit of a letdown for investors.
Oh, okay.
Yeah, so a lot of pressure on Saturday's announcement. All right, so they're really trying to pump things up over there. But why should we care? What does this mean for us over here?
Right, because, as we were saying, everything's connected. China's a big player on the world stage. When their economy's not doing well, it can impact, the global economy.
Right.
And they've been dealing with some big problems lately.
Big problems, like what?
Well, consumer spending has been pretty weak. People just aren't spending as much.
Yeah, that's never a good sign, is it?
No, not really. And then there's the whole property market situation.
Right. Everyone's been talking about that. So what is it, like a housing crash?
It's more of a kind of a slow motion problem.
Okay.
Like remember Evergrande, that big property developer?
Oh, yeah.
That almost went bankrupt, went under
Yeah.
last year, yeah. So it's kind of like that, but on a much larger scale.
Oh.
They've just built way too many properties, and now they've got all these unfinished buildings and people defaulting on mortgages. It's, investors are definitely worried.
Wow. So basically, it sounds like a big mess.
It is a big mess. And the thing is, it's not just China's problem,
Yeah.
right? A weak Chinese economy affects everyone. Global trade, the prices of goods, everything.
Right, because they're such a huge player.
Exactly. So everyone's kind of holding their breath to see if these efforts to boost the economy actually work.
Yeah, fingers crossed.
Yeah. And speaking of economies, we were talking about interconnectedness. Let's talk about Germany for a second.
Okay.
Bit of a good news, bad news situation.
Hit me. What's the good news?
Well, retail sales actually went up in August.
Okay.
Not a huge amount, but hey, it's up.
Right, so people are spending money. That's good, right? Means the economy's doing all right.
Well, here's the bad news.
Uh-oh.
Germany just downgraded their economic growth forecast. For 2024, they're actually predicting a shrinkage.
Wait, hold on. So the economy's shrinking, but people are spending more? How does that even work?
Yeah, It seems kind of strange, right? But it shows why you can't just look at one thing, like retail sales,
Mm.
and get the full picture.
Okay.
So yeah, people are buying more, but there might be other things going on, like businesses aren't investing as much, exports are down.
So even though people are buying stuff, it doesn't necessarily mean everything's great.
Exactly. Germany could be heading for a recession, actually. They're first in almost like 20 years.
Wow. That just goes to show you how fast things can change, huh?
It really does.
Yeah.
1 minute things seem okay, the next minute.
You're in trouble.
Exactly. So it's really important to kind of stay informed.
Absolutely.
Yeah.
So with all this uncertainty flying around, what else is making things feel shaky?
Well, we got to talk about oil prices.
Oh, right. Yeah, the article mentioned that those were up today, but I thought they'd been going down the past couple of days. What's going on with that?
Yeah. And you know what else? Hurricane Milton, even though it didn't actually hit any oil infrastructure,
Right.
it still had an impact.
How so?
Well, when there's a hurricane, people might change their travel plans, businesses might close temporarily, and all of that affects the demand for oil.
Oh, okay. So even if the hurricane doesn't directly damage anything, it can still mess things up.
Exactly. And then, of course, there's always the whole Middle East situation, which is always a bit unpredictable.
Right.
Any escalation there, especially involving, say, Iran's oil facilities, that could send oil prices through the roof.
It's like trying to predict the weather, but instead of rain or shine, it's the price of oil going up or down.
That's a great way to put it. It's unpredictable. And that's why it's such a closely watched thing in the markets.
Yeah, it really is. It's like you never know what's going to happen with oil.
Nope.
It's kind of wild. So we've got Europe waiting with bated breath to see what the U.S. inflation numbers look like. China's trying to give their economy a jump start. And oil prices are, well, being oil prices.
Exactly.
Anything else we should keep an eye on as these stories develop?
I think you hit the nail on the head. It's all connected.
Right.
What happens in one part of the world can have a huge impact everywhere else.
Yeah.
And that's really what we're seeing here.
It's a good reminder that, even if we're not experts in finance or anything, we're still part of this big global economic system.
Absolutely. And I think on that note, we've talked about China's stimulus efforts. We've talked about Germany potentially heading for a recession. But how do you think those two things might actually interact in the coming months?
Ooh, that is a good question.
Yeah, could they make each other worse or could they balance each other out? It's something to think about.
It really is. And it seems like with market news, every answer just leads to more questions.
Right.
That's what makes it so interesting. Well, thanks for diving deep with me today.
My pleasure.
And for everyone listening, we'll be back soon with more insights from the world of market news. See you next time.